Hello and welcome to our weekly outlook. This is Ahura and we'll be with you with the global economic outlook in the week ahead, week number 5 of 2026. As always, let's first check what happened previous week and what we had so far, and then we can go forward and check the week ahead as always what we do. The previous week was run actually by two major news. One, that we had economic data. We had a central bank meeting in the United States. We know that. I know we know. But the thing is that Federal Reserve or Fed decision was already priced in the market. So the market didn't, be honest, didn't somehow ignored that because we already knew the result, and the result and the meeting also was very natural and nothing special to say. That's why I didn't make any changes in the market. However, two other things that made the change. One, again, another one which was related with the central bank. It's the Kevin Marsh. I don't know why. I was saying they keep saying that Kevin Marsh. Kevin Marsh, it's 2 days. I'm repeating that of the Kevin Marsh. Sorry to say for the mistake. Yeah, the Kevin Marsh nomination for the central bank chair for forfeitures as the next fixture actually to be replaced by Jeremy Powell. I really like the Jeremy Powell. It was very nice, but he is actually is a very nice leader. I like what he did. Now we are preparing for another feature. Kevin Warsh, unexpected person, the most unexpected person between all the names we could hear in the previous months. Kevin Warsh totally erased all the concerns about the independency of the central bank, about everything that maybe everyone, the gold and the silver was increasing in a recent months because of everyone is like, wow, Mr. Trump is trying to to take the central bank in its control with the nominations that he has, his like his own persons in there, just things like that. So but as always, what the Trump does, he always used the way that's surprising. I mean, and he is amazingly not how to surprise the people. That's what he knows the best. I mean, he's very good in that. How he is the best in that, I can't even explain. So while we were thinking about the many other names, suddenly he nominated Kevin Warsh, the person with a very strong background. I think what at the beginning I told I really liked what when Mr. Powell did. I really meant that, but I still, again, I mean that what I'm saying. Kevin Warsh will be a much better feature for the Federal Reserve than compared with the Powell, which was very great man, and is still a great man. Kevin Warsh can be the best feature so far. He has a very strong background. He was as a Fed governor since 2006 till 2011 during two different presidents from different parties, Obama and George W. Bush. So he worked with the Republican, he worked with the Democrats, and he worked very well. He was attending in the G20 under the U.S. Face, was just like presenting the US actually in the G20 for the economic sections. He was amazing. He always did showed himself as a strong person. He showed that he's not making a decision based on the political activities, based on the political situation. He's very independent, sounds like this. And other thing that was very interesting for us, actually for me at least, that between all the names that we had, Kevin Rush is the most dovish, most hawkish person actually. While everyone thinking that the Trump is going to nominate someone with the dovish ideas, the Kevin Rush came. He's the person who is against mostly. He's mostly against the big stimulus packages. He doesn't support things like that. He support that the economy should move by economic stuffs, not too many support from the government and the central bank. That's this person. That's this person. So that's why the market really had a very big reaction, especially in the gold and the silver market, which they gained over these concerns, and the US dollar, which was losing the value because of concerns over the central bank governor. Now, with this new governor, with this new possible governor, which is supposed to be, it must be confirmed by the Senate, but 99.9% he will be confirmed. I mean, I don't think even the Democrats they came across and have given negative vote for him. I mean, he must probably give 100% votes for both Democrats and the Republicans. I don't have any doubt that he's going to be approved by the Senate. Anyhow, that was what happened. On the other hand, on the geopolitical side, we know the things that happening across the Middle East is really concerning and increasing the concerns every day and every second one more than previous day. The thing is that the market is really doesn't know what what President Trump is going to decide, and the concerns over that geopolitical tensions, whether the America will attack to the Islamic Republic based in Iran or not. The revolution in Iran is in its 36th day, and it still continues, and the internet shutdown particularly is continues. The people they do not have the normal access to the internet. I mean, they have some and they don't have some. It's just like the normal access to the internet, the normal internet connection is lost there. So the people are really the people really suffering there and asking United States and investors to get to go and help them across against this the dictator the dictator in Iran, which they occupied the land of the Persia, and they based an Islamic, very radical Islamic regime in the land of the Persia, and the genocide that they had during the last 36 days with more than 60,000 killed. That's real genocide. I never saw that the government kills its own people as much as they killed in 2 days. Maybe they had during the many years, but in 2 days, more than 60,000 killed. And even you kill the injuries in hospitals and things like that. It's very disgusting things that when if you look at the picture, and you know what they do, they go through the internet and the website and online, they change the narrative with the new narrations that they're creating across the internet, with the uploading too many photos and supporting them out. Things like that, they're discussing, very disgusting government. And yeah, things continues. The revolution is continues, and this is on the geopolitical side and what's happened out of the economic calendar. But if you look at the economic calendar, the last week on the economic calendar also was a very interesting week. We had many data to talk about, but mainly I will talk about the central banks meetings that we had. In China, we had we know already that the People Bank of China held the rates for 1 and 5 years loan prime rates at 3.50% for 1 and 5 years loans. Then on Wednesday, we had two central bank meeting in Canada. Bank of Canada, or BOC, held the rates at 2.25%, but they are really getting ready for 25 basis point rate cut, as it is happening in Canada. Same thing that happened in Canada is happening in Brazil and South Africa as well, because in Brazil, South Africa, and Canada, we had a central bank meeting during Wednesday and Thursday, and all these three banks, they held the rates at the current rate. In Canada at 2.25%, in Brazil at 15%, and in South Africa at 7.25%. They held the rates. They held the rates unchanged. 6.75%. Sorry, at 6.75%. They hold the rates unchanged, but all of them, they are in economic condition, that weakening economic condition, while the inflation is somehow under control. So all these banks, they're going to cut the rates in their next meeting, at least with 25 basis point. On the other hand, we have the United States. In United States also, Federal Reserve had the monetary policy meeting and interest rate decision. We know that they kept the rates unchanged at 3.75% as widely expected. The thing is that inflation in the United States is somehow low, but on the other hand, it's still way above the central bank target. At the same time, we have the economic data, strong economic data, like the GDP around about GDP expectation about 5%. We have, sorry, we have labor markets at 4.4%, 4.5% unemployment rate with the initial claims around 200,000 and things that the labor market is somehow is fine and doesn't need strong support there. While the support that they have, they can handle this higher for longer. We have other economic data also is fine. At the recent week, and mostly we had Red Book retail sales around about 7%. Like 1 week we had slightly lower, but others around 7%, 6.7%, 7%, 7.2%. Red Book retail sales. These numbers shows that the US economy somehow is struggling, is under pressure, but it's fine. I mean, especially if you compare with Europe, if you compare with the UK, China, and other economies, you can see that the economy is really doing fine. So that's why the central bank decided to hold the rates, and that's why the meeting and the statement and the press conference was really and what was totally we can say natural, and there is no sign that whether they're gonna cut the rates. I mean, anytime soon or not. For now, market is deciding, thinking about the two rate cuts so far for later this year in 2020 for whole 2026. Actually, now the market now is thinking about two rate cuts. I mean, this is what the market expecting. So that's what's happened in previous week. Let's go check it for week ahead. As for the week ahead, again, we're going to have very important week with too many data, especially with the central banks meetings and PMI numbers. I will explain about the PMI. Because the most about I'm going to talk about the central banks, but mostly about the PMI. I will give it a general comment. The PMIs, we are expecting to have a better numbers for both manufacturing and service PMIs, which is going to be published on Monday and Wednesday. Generally, we are positive about the January PMI numbers in most developed and developing economies. That's about the PMI. So we have the positive expectations. On the other hand, we have inflation numbers in a Eurozone, and we do expect the central inflation to slightly lower to be eased at 1.8% from previous 1.9%. This is what we're expecting, while the core inflation also supposed to lower to 2.2% from previous 2.3%. This is what the general market expecting. But market, we're going to focus on the central bank's meeting. On Tuesday, we have a Reserve Bank of Australia meeting, and where we expect to see the Bank of Australia, Reserve Bank of Australia, to increase the rates by 25 basis points. As the inflation is the concern, still the inflation is concerns, while the economic development is not so bad. So that's why the central bank, if you remember the previous meeting, they gave this alarm and they gave when they hold the rates at 3.60%, they kept the rates unchanged at 3.60%. They mentioned at the statement that if the inflation keep increasing, we're gonna hike the rates, and the inflation increased at 3.8%, if I don't mistake. So they they are going to do what they decide, what they promise to the market, and hike the rates. This is what is happening, what's going to happen, and what the market expecting to be happen in Australia. On Wednesday, as mentioned, we have inflation numbers in Eurozone. We talked about that, but on a Thursday, we have again to another central bank meeting, Bank of England and central bank in European Central Bank. The Bank of England is supposed to hold the rate at 3.75% unchanged. That's what the market expecting. But at the same time, we know that inflation is lower than the previous weeks. But at the same time, we know that the economy is struggling. So there are really doubts. I mean, there are still, while the market expecting with the 5 votes against 4 votes to hold their rates. For members, they're gonna vote for 25 basis point rate cuts. We don't have any votes. We are not expecting any full vote for a rate hike. But there are some guesses that maybe Mr. Bailey, the BOE governor, maybe Mr. Bailey votes for the rates cut, and we're gonna have a surprise there. So if you saw the surprise there, don't be surprised because that's possible. That's possible, and there is a like less than 40% chance for that, but there is a chance to see 25 basis point rates cut, but there is a less chance for that. But however, if the BOE do not cut the rates in February 5, they're going to cut the rates in the next meeting for sure. That's what's supposed to happen because UK economy is really struggling. On the other hand, if you look at the Eurozone, and by the way, the UK about the UK economy, we should wait about the some news about the economic relation between United Kingdom and China. Sirmar, Kevin Steve Meyer. Just sorry, they're just mixing the names. Starmeyer, he was in China, and what's happening in China between the China and Canada and China and United Kingdom. Uh, the thing is that U.S the US between the US and Canada and US and United Kingdom, we had a very good trade relations, and they were the first countries that they were they were the first countries that they had trade deal with the United States after trade tensions that we had, and now both of them they met they met the China in the previous weeks. And there were a conversation, and there was a talks about their new economic relation between the UK and China and Canada and China. And US is warning them, both of them. You have to follow this news and what happened if the US will want to do something or not. Don't forget in line with the central bank meeting, follow this news. The thing is that in Europe things happen slightly different, which was not against the United States, and the US also didn't have any problem with that. The US Eurozone already made agreement, free zone agreement, free trade zone agreement, something like that, with the Indian, which is very good for both of them. Indian companies, they're going to find a very good market, especially tech companies, Indian tech companies. They're going to find a very good market in Europe, and also the Indian farmers. The thing is that in US, UK, European economies generally also together, they're gonna have a very big market across 1.5 trillion billion people. So they're gonna have a very big market in India. So most of the Indians also they are educated people, educated nations. So they're gonna probably have very good benefits from this relation. However, this is what happened there, and what European also in the euro, if you trade in euro or European companies, you're gonna follow this news and the effect of this agreement as well. On Friday, we will have the Indian Central Bank meeting as well, where we expected to see that the central bank in India, or RBI, Reserve Bank of India, to hold the rate at 5.25%. After that, in the previous months that they are cutting their rates, the Indian rupee was in a very weak condition, and inflation is getting some signal of giving some increasing signals. That's why the central bank in India is possibly there are possibility that this to make. I mean, they are going to actually. They are not the possibility. They are going to make more cautious decision and hold the rates at the current levels, not cutting the rates further. So that's what's going to happen in India to see the interest rate at 5.25%. But finally, on Friday, we got NFP numbers in the United States, and the most important one of the most important numbers that we have to follow, where we expect to see unemployment rate to stay unchanged at 4.4% with 0.3% average earning growth, while we expect around the different expectation between 60 and 80,000 newly created job. We say, let's say the 67,000 This accounts expectation of newly created job, which is going to be a fine number, the positive number. That will put the average 3 months average around the 50%, 50,000, which is for now fine. While we know that we have to make it a little bit change in the definition of the labor market, changing some definition about things like that. So anyway, the unemployment, if these things happen, which means that the labor market gives a strong signal, and that if that happen, which is most probably will happen, the market will telling us that the US economy is fine, and labor market also giving up the resilience signals. So we shouldn't be worried about about the US economy and what's going on. So higher for longer can be again very the higher for longer can be a very possible scenario for the next months. Looking at the chart and see that how this data can move the market, you can see the risk market risk around 19, and it's still in the high levels. And we can say that the market risk is still high. Even thought after Kevin Rush nomination, the risk is slightly eased, but still the market risk is still high. That, on the other hand, with the Kevin Rush coming as a nomination and the market risk, despite slowing, is still high level, increase the demand for the US dollar, and you can see the dollar again above 96 and almost in a 97 area. That changed the market for the gold and silver as well. Gold and silver, they had one of the worst days. The silver had its worst day with more than 30% fall. It has the worst day ever in history, and gold also had one of these worst days. The thing is that in recent months, gold and silver was increasing following the concerns about possible interruption of the current interruption on the US on the central bank, and taking advantage of the new Fed governor with putting someone close to the White House. So things are like that. These concerns now is over almost, and that's why we can see that because of these concerns, there were many concerns about the US bonds, about the US dollar. That's why the people, they were buying mostly gold and silver. So now with this decision, gold and silver, they lost their demand, most part of the demand that they had in the previous one. But still, if you look at the bigger picture, you can see both of them still there in a uptrend, even with the correction that we had. Still, we can say in the mid and long term, still we can see the uptrend. In the energy market, oil is still increasing. This is because of, mostly, as you know, because of the geopolitical tensions going on in the region in the Middle East. That's why this oil is stronger right now, and the oil market is under effect of the geopolitical tensions, not because the oil market doesn't move because economic data, the supply and demand shows the price around 57, 58. Don't forget Sunday and Monday, there is an OPEC meeting, and on Monday evening, most probably we're going to have the OPEC meeting announcement, and it's also very important to see what they're deciding. However, the decision was what they had previously, and we are not, most probably we are not going to see any surprise there. So and after that, on the stock market, if you look at the stock market, we can see that the S&P 500 and Dow Jones and all of them, mostly the stock market, they somehow welcomed to just like because of the lower tensions and lower uncertainty in the market, they somehow welcome to the Kevin Rush the nomination. But at the same time, since that he's a little bit more hawkish person, the market had concerns over there, and we know that the price, because of the hawkish decisions and hawkish ideas that the Kevin Rush has. So most probably we're going to have the Zeit moment with under pressure for the stock markets. This is what's happening here, especially if you have stronger labor market. Looking at the cryptocurrency market, Bitcoin is still under pressure, under 90,000, especially with the cryptocurrencies with the higher risks in the market, the cryptocurrency, and especially the Bitcoin, full around 81,000. There is still no clear signal about the sign about the positive reaction in the cryptocurrency market, especially for the Bitcoin. But still, In the recent days, we saw some positive signals there, but still, especially as long as it's trading under 90,000, the cryptocurrency market is still downside and a negative. This is what happened previous week and what we are expecting for the week ahead. Hope it was useful for you. Talk to you again next week. Have a good day. Bye bye.